Hello, and welcome to Agents of Impact, a podcast from Impact Alpha.
Some of the best products we've designed are ones that build on things that people are already doing. We always apply a big behavioral lens when we're designing products.
That's Ellen Iskenderian, the CEO of Women's World Banking, and my guest today. I'm David Bank, editor and CEO of Impact Alpha, investment news for a sustainable edge. These conversations with Agents of Impact span the landscape of impact investing and sustainable finance, from institutional and individual investors to fund managers and advisors to foundations and families and everyday retail investors. And of course, founders and entrepreneurs. Mary Ellen and I discussed Women's World Banking's 45 years of work advancing financial inclusion for low-income women around the world and new initiatives around fintech, financial wellness, and climate resilience. You can get all of our Agents of Impact podcasts and our weekly Impact Briefing and many more shows on the Impact Alpha Podcasting Network. Go to impactalpha.com/podcasts. While you're there, make sure to sign up for our free weekly newsletter, Impact Alpha Open. Let's jump in. Mary Ellen Iskenderian, welcome to the podcast.
Thanks so much. Great to be with you, David.
I've been so much looking forward to this conversation. Women's World Banking, of course, one of the pioneers and early adopters, I guess, of practitioners of a kind of gender lens investing that's now become much, much more, I think, well understood and popular. But also, I remember you made a few years ago a pledge to reach 100 million women with financial services, and I think you're more than halfway there and on your way. So tell us what's going on and what's got you excited.
It's a really exciting time to be in the space of women's empowerment, gender lens investing, impact investing more broadly. Because I think we've a little bit cracked the code on how to reach those who have been underserved by the financial sector. You mentioned our 10-year strategy. When we set that 100 million women target, we wanted to reach with a product or a service that they previously didn't have access to. That we were really, that seemed like a really, really big goal and a really great North Star to dive to. But if you design products that really meet women's needs and you make sure that you're bringing in regulation that is responsive to inclusion, that addresses some of the barriers. When we did our strategy, we looked at what barriers existed in some of the large markets where some of the largest populations of underserved women were. We thought we'd see like lots of really different stuff across markets. And it turned out the barriers were really simple, that there was a lack of access to technology in most countries for women. We're still at a 15% gender gap in terms of ownership of smartphones, but that's an improvement. We still see too many financial service providers think that there isn't a business case or there isn't a bankable segment, but happily we're really starting to change some hearts and minds, and fintechs have been a really great way for women to kind of get past some of the legacy financial institution barriers, like the lack of data that have held them back. And then on the regulatory side, bad collateral regimes that require, all loans have to be collateralized by a piece of property, which, frankly, low-income men aren't necessarily going to be able to borrow against property. So, we work with policymakers to put in movable collateral registries, or change the policies that allow more financial service providers to meet people where they are with financial products.
Great. Well, just give us a sense of sort of how Women's World Banking operates. I think people may remember, that you're a lender to microfinance institutions, but I think that's kind of where you started. I know things have evolved quite a bit. So how do you work with partners and through what kind of mechanisms?
Yeah, I joined the organization a month before Muhammad Yunus won the Nobel. And, I probably should have known, that was going to be the peak. But it was also a couple of months before the launch of M-Pesa. And, that I think that combination of things, the recognition that the low income population really was a bankable segment, but that digital was going to be the way we were going to be able to bring the price point of reaching low income population with financial services. I think was is really the almost the re-origin story of women's world banking.
And just to remind people, M-Pesa, a mobile money platform
Yes,
that took
thank
off
you.
in Kenya and became kind of the model for similar projects in many other places.
No, exactly. And, frankly, the traditional microfinance sector was a little slow to recognize the importance of digital. And so we quickly started, any organization, a bank, a fintech, an insurance company, a mobile network operator that had that line into that low income woman's life, we felt was fair game for engaging with the delivery of financial products and services. I think, some of the best products we've designed are ones that build on things that people are already doing. We always apply a big behavioral lens when we're designing products. One thing that I think you and I have talked about before is one of my favorite products. I was in Indonesia earlier this year, and my team there knew that it was a kind of traditional practice to for an expectant mother to save for her prenatal care, the delivery of the child, and then immediate postnatal care with her midwife. That was a trusted person. She knew that if the money was safely with the midwife, that nobody else was going to have claims on that money. And it happened to coincide with one of the largest state-owned banks, BNI, in Indonesia, really under a little bit of pressure from the regulators and their own market dynamics, that they weren't all that well represented in the rural areas. So we worked with them to literally make midwives into their rural banking agents. So we digitized that whole traditional process. So it was something that women were already quite used to. But we also gave these midwives who are, as we learn, like real entrepreneurs, we kind of gave them another source of revenue. So they've become, digital banking agents. And it's really been quite a success. We're seeing not only in this Indonesian project, but in many other places that women agents, women who come out of the community, are just knocking it out of the park in terms of business results and the level of trust that's built, their understanding of how to talk about problems, how to talk about use of technology. You'll find this amusing, David. We've had men tell us, I'd rather ask a woman a stupid question about how to navigate something on the digital app than I'd like to another man to know I don't know the answer to this. So we've had a lot of luck with this idea of sort of a practice that people are really used to, and then people who come out of the community to offer the product.
That's fascinating, and it brings up I think, a broader question. Low income women as to pardon the expression, target market, is not necessarily, everybody's first instinct of a huge money making, sector. But you have found that there's, kind of alpha in our context. There's not only obviously a need, but there's also an opportunity and a huge unmet demand, consumer demand. So just tell us sort of who you're serving.
No, it's a great question. So I'd say for the most part, when we're partnering with a financial institution on our advisory side, it's going to be a large commercial bank or a fintech that's probably going after a consumer market. We had a big focus on savings and the ability to have a safe place to save. We found so many, both men and women in the market segments we were talking to, wanting a safe place to save, but wanting to know that their savings would unlock credit for them. And that bundled product, that those two things together became a really popular offering. We've reached, I think we're up to 27, 28 million low income people in India with precisely that product. If you, again, using behavioral techniques, if you save over a 4-month period, an amount that you say you're going to, so it's all about that commitment. You make that commitment, you unlock about $120 emergency credit line. The exciting thing about that, you know, sad but exciting, I guess, at the same time, is we've seen in some of the rural areas in India where there's been, terrible problems with extreme heat, terrible floods. We're seeing real differences between the families who have been saving with us and then have access to emergency credit. The kids are staying in school. The families are, more members of the family are eating 3 meals a day. They're able, if they're farming, they're able to replant faster, and so the simple savings and credit combo is turning out to be a really important climate resilience product. Um, in the last year or two, there's been a much bigger demand for credit for women led MSMEs, small and medium sized enterprises. And again, that's been really exciting. We're working one thing I haven't really talked about is our investment funds. We have investments in a couple of digital lenders that have been quite successful in not the traditional consumer lending that we've been hearing about, which quite frankly can be really rapacious at very high rates, terrible repayment rates, is I think is really not a particularly responsible product, but a credit product that is targeting a business, an enterprise who may not have collateral, may not be interesting to a larger bank, but because the data and the algorithms that these lenders are developing using the data, can be quite lucrative.
So alternative credit scoring that unlocks
Exactly.
mispriced risk, I suppose, in the market, and makes things more available. I mean, that brings up an interesting question, and you've been sort of educating me on this, that financial inclusion was perhaps an oversimple way to think about it. It's not just getting access to a bank account or to even to mobile money. There's so many more parameters on which a product has to fit the need, and then also be obviously a viable product. So what's the new word? What's the category of impact that we're headed for now?
Yeah, a lot of people are sort of using these terms financial wellness, financial health, somewhat interchangeably. I gather they're different, but they actually might have sort of minuscule differences. But I think they're all getting at this idea that just having the bank account isn't isn't enough, that you've got to be able to fully engage, particularly if there's technology. You have to understand how the technology works, how the product works. I was in Kenya. Actually, I was there during the riots, which was kind of little dicey. But I was there at the end of June, and it was fascinating, because of M-Pesa, the digital money product we were talking about earlier. They have a very high rate of financial inclusion, 84%, and men and women both are included in the system, but they've had a declining rate of financial health, people feeling that they can organize the money they need if there's a financial emergency, or there's illness in the family. So that really speaks to designing products, understanding what the pressures on a low income household are, and designing products that meet those pressures. And I think that's the challenge for all of us in this industry, but I'm happy to say it's something that I think we do particularly well. We're also very engaged in highlighting what these issues are for policymakers, so they don't, unexpectedly or unintentionally make the problem worse with regulatory issues.
Oh, interesting. By overburdening the sector and thus maybe disadvantaging newcomers with
Exactly,
new models. Yeah,
exactly,
yeah.
exactly. I think the full opportunity, the full capacity of digital financial services is only just starting to be reached. The GSMA, the Mobile Money Industry Group, puts out some really interesting data that it's the companies that are able to layer on financial services that are reaching break even faster, that are making those huge digital infrastructure investments worthwhile. And so we don't want to cut off the golden. I'm mixing metaphors here, but the the hen that laid the golden egg. We don't want to cut that off before they've been able to recoup the loss and really offer a broader set of services.
So it's like move over, crypto bros. Here come the financial wellness gals, maybe.
I like the sound. I like the sound of that.
So you mentioned the stressors on families, and earlier you mentioned climate resilience, and I imagine that's coming up in many of the lenders and context the environments in which you work. So how does climate figure into kind of the credit risk profile of low income women?
Yeah, I think it in a couple of ways. First of all, just the risks themselves. You're seeing, and I'm just getting really educated myself on the issues of extreme heat, for example, that just, physiologically, men and women experience heat very differently. And what we're already seeing emerging in India, which is terribly sad, is that you're starting to see women quite late in pregnancies miscarrying explicitly due to extreme heat. So you've seen some really innovative, not only innovative extreme heat technologies, but also extreme heat insurance cover has started to be introduced, which we're very excited about. I think our network of financial service providers, we work with. I should have said this earlier, 74 financial service providers in 34 countries around the world that serve 158 million women clients, can be a great distribution network for some of these products. We're starting to see flood insurance, as I mentioned earlier. The very basic savings and emergency credit can be very helpful to contributing to client resilience. Digital payments are absolutely critical because you're seeing a couple of things. One, if there's a rural area that really isn't farmable, very often it'll be the male in the household will go off to find work. If the family back home doesn't have a good stable digital payments mechanism to receive payments home from him, that's not workable. Unfortunately, you're also seeing, there are more displaced people on the planet today than ever before, and you're starting to see a growing number of those displaced being displaced by climate factors. And so being able to take their digital ID with them, they're making sure that remittances or relief payments can find them wherever they are displaced to, becomes really, really essential.
I know there's been a long history of financial exclusion of women, but it's kind of also become now a sort of article of faith, the opposite in impact investing circles, certainly at Impact Alpha, that there's a kind of financial advantage in lending to women. Is that actually true?
Well, I can speak to our portfolio. We have a little over 150 million assets under management in two funds that have made 21 investments in inclusive finance institution. I think we're in 14 countries now, a total of 10 million women served. And we consistently see, portfolio quality improves exponentially in comparison to the increase in women clients. There used to be this lore around, well, women in the micro space were better repairs, but once you got to the SME, you saw a real divergence. That, at least in our portfolio, is not true. And what we have found, though, is the customer care is really important. You can't just hit some kind of target. Oh, well, we're going to make $10 million of loans to women, make the loans, and then not serve them, not continue to serve that population. And that unfortunately was happening. I'm happy to say at our portfolio companies, it's something we pay a lot of attention to. We provide a lot of value added services to our investees. And we've really no longer seen that portfolio quality difference. The other thing that we're very proud of is there used to be this bias towards much smaller loans to women's businesses, and we've seen that loan size gap really reduce. And then the last thing I'll say, and I do think that there's a direct correlation that we're seeing in our portfolio, is more women in a financial institution not just at the board, not just in the C-suite, but all the way through, has a direct impact on your ability to reach and serve women customers. And there's a really, if you want to serve more women, hire more women is really, it's that clear.
Nice, nice. Okay, so you've talked about the evolution from a sort of microfinance lender through some fintech, and now you've mentioned the funds. What's next for Women's World Banking, and what do you need, frankly?
Oh, well, I think, we want to finish off this strategy strong, not only, hitting that 100 million target, but really being able to say, these are the products that women need. These are the things that keep them included in the financial system. We saw something like 240 million women come into the formal financial system through COVID, mostly because of digitally dispersed government relief payments. But we want to make sure that they stay in the system and that we continue to serve them with products that they need and that are of value to them. And the fact that financial services now are such a important part of any story around climate resilience. Unfortunately, when this year's COP topic is climate finance, when you look at how climate finance has been divvied up, it's the energy transition has gotten all of the big money, but the adaptation and resilience, which tends to be where women are looking for finance. How do I adapt my business? How do I get access to a solar irrigation pump so that I'm part of the transition, but I'm also adapting my business? Um, much less money is going to that. So we're working with some very exciting new partners for us in the climate space to look to ways to both educate and do a little risk mitigation for financial service providers who may not recognize, again, that this is a great opportunity to be lending to women so that they can participate in that just transition. Number one. Number two, I think we've seen the role of investor is one that we're very proud of, and we've got some really terrific impact results in terms of the way we've turned companies around. Unlike a lot of gender lens investors, we don't say, oh, you have to be a woman owned business or a woman led business. We want to make sure that there's diversity in the organization and that you're serving women clients. And it's been really gratifying now to see the number of companies who've said to us, um, you know, we want to learn how to do this. We want to have more of these customers. We know that the retention rates are higher. We're trying to grow in a market that has a big underserved population. Women's World Banking come into our cap table and help us learn how to do that. So I think our role as investor will only continue into the future.
Well, I think there's unfortunately going to be surging demand for climate adaptation
Yeah, right.
finance. And if you've learned how to do it and to make services available where they're needed, I think Women's World Banking has at least another 45 years, and I think possibly blow through the 100 million target. So, Mary Ellen Iskenderian, thank you so much for joining with us, and we hope to have you back soon.
Thank you so much, David. Great to speak with you.
That's going to do it for this Agents of Impact podcast. Thanks to all of our listeners and to our producer, Isaac Silk. We'll be back with more conversations soon. In the meantime, why not go all in and subscribe to Impact Alpha to get our award-winning daily brief in your inbox each morning? I think you'll find it valuable. Till next time, I'm David Beck.